Imagine opening a bank account in 1996, depositing a small amount of money, and then completely forgetting it existed. 30 years pass. You move cities, change jobs, buy a house, raise a family. Life keeps moving. Then one day, you find an old bank statement in a drawer. You take it to the bank. The account is still there. But the interesting question isn't simply how much money is inside. It's what happened to that money while nobody was watching. Because a bank account that sits untouched for decades can reveal something most people never think about. Money doesn't need your attention to move through a financial system. And sometimes, neither does the bank. Let's imagine a fictional account belonging to a man named Arun. In 1996, Arun was 25 years old. He had just started his first job and decided to put aside 10,000 rupees. At the time, 10,000 rupees felt significant. He opened a savings account, deposited the money, and received a passbook. Then life happened. A new job, a marriage, a move to another city, a new bank account. The old passbook disappeared into a drawer. Arun didn't close the account. He simply forgot about it. For years, nothing happened, or at least nothing that Arun could see. This is where the story gets interesting. A bank account isn't a locked box containing your exact notes with your name on it. Instead, your deposit becomes part of the bank's broader balance sheet. The bank has a liability to you. It owes you the money represented by your account balance. And the bank uses its assets, including loans and investments, to generate income. That's the basic banking model. Depositors provide funding. Banks use that funding alongside other sources of capital and financing. Borrowers pay interest. The bank earns a spread between what it earns and what it pays after accounting for costs, credit losses, capital requirements, and other expenses. So while Arun is ignoring his account, the financial system isn't necessarily ignoring the money. But here's where people often make a mistake. They hear the phrase compound interest and imagine a forgotten account becoming a fortune automatically. That's not how it works. Suppose, purely as an illustration, Arun's 10,000 rupees earned an average annual return of 6%, compounded annually for 30 years. The mathematics would produce roughly 57,400 rupees. That sounds impressive, but there are several problems. First, a normal savings account does not guarantee a constant 6% rate for 30 years. Interest rates change. Bank products change. Inflation changes. Fees can apply. Taxes can apply. And in some cases, the account may eventually become dormant or subject to specific rules governing inactive deposits. So the real story isn't leave money in a bank and become rich. It's much more interesting. The story is about what happens when people stop paying attention. Because financial neglect has a strange characteristic. It is usually invisible. If you spend 500 rupees today, you notice. Your wallet is lighter. If you forget about 10,000 rupees for 30 years, there is no daily pain. There is simply silence. And silence can be expensive. Consider inflation. If prices rise by an average of 5% per year for 3 decades, the purchasing power of money can fall dramatically. A balance that looks larger on paper may buy far less in the real world. This is one of the great misunderstandings about savings. The number in your account is not the same thing as your wealth. 10,000 rupees is a quantity. What matters is what that 10,000 rupees can actually purchase. Now return to Arun. 30 years later, he discovers the old passbook. He walks into the bank, expecting a forgotten little account. The employee searches for his records. There is a pause. The account exists, but it hasn't been operated for decades. Now the question becomes administrative rather than mathematical. Is the account active? Has it been classified as inactive or dormant under the applicable rules? Were there changes in the bank's systems? Are updated identification or customer records required? Has the balance been transferred or reported under an unclaimed deposit process? These details matter because banks cannot simply treat forgotten customer money as their own. Financial systems have rules for inactive and unclaimed accounts. In India, for example, banks maintain mechanisms for identifying unclaimed deposits and facilitating claims, including through the RBI's Udgam portal. The exact treatment depends on the account, the bank, the type of deposit, and the applicable regulations. And that's the uncomfortable part. The money didn't disappear simply because a room forgot it, but finding it again may require effort, documentation, verification, patience. 30 years of silence can create a surprisingly complicated paper trail. And there is another problem nobody talks about enough. The older the account becomes, the more likely it is that the person who originally opened it isn't the person searching for it. Maybe Arun died. Maybe his family doesn't know the account existed. Maybe the only evidence is an old passbook sitting inside a cupboard. Now the forgotten account becomes an inheritance problem. And this is where a tiny financial decision made decades ago can suddenly affect an entire family. There is a broader lesson hiding inside this fictional story. Modern banking makes money feel permanent. You see a number on a screen. You assume that number tells the whole story. But behind that number is a network of records, institutions, regulations, interest rates, inflation, identity checks, and legal processes. The account is simple. The system behind it isn't. And there is an irony here. We spend enormous amounts of time trying to earn more money. Yet some people lose track of money they already have. Not because someone stole it, not because the market crashed, not because they made a terrible investment. Simply because they stopped looking. Arun's 10,000 rupees was never a magical investment. It was just a deposit.
Its eventual value depended on the interest it earned, the purchasing power lost to inflation, the rules governing the account, and whether anyone remembered it existed. That's why the most important number in an old bank account may not be the balance. It may be the date of the last transaction. Because after 30 years, the real question isn't how much money is there. It's who remembers that it's there. And somewhere right now, there may be an account opened decades ago, quietly sitting inside the financial system, waiting for someone to look.